Well, let's move on here to those two names that Inez highlighted, both Apple and Amazon, warning of inflationary pressures building in the current quarter. Apple warning that supply constraints stemming from chip shortages and COVID-related disruptions is likely to result in a $4 to $8 billion hit. Meanwhile, Amazon says it's looking at incremental costs of $4 billion in the current quarter, in part because of labor supply. Let's take a deeper dive into those numbers. We've got Santosh Rao, Manhattan Venture Partners, head of research. It does feel like there's a common thread here, Santosh, in the calls, not just with Apple and Amazon, but so many of these earnings calls talking about inflationary pressures building up. How big of a concern are these numbers to you, especially for a company like Apple that still has heavy exposure to China, given the lockdowns that we've been seeing over there?
Absolutely. Thanks for having me. I think one thing is for sure, the after effects of the pandemic is hitting across the board, whether it's Apple, whether it's Amazon, whether it's all the chip companies. So the supply shortages, the bottleneck, the war, and everything else is all playing into this quarter, the quarterly numbers right now. It is a concern, and the company has said that it's going to slow down things. But you really have to look at it longer term. Look at the second half. You can't look at just this quarter. In fact, Apple did very well this quarter, given all the circumstances. They think that it'll spill over into next quarter where the supply bottlenecks will hit them. But I think overall it's holding up pretty well. It's not immune to the downdraft to the tech sector. Everything's getting hit. And Amazon was really a big issue at this point. They had a bad quarter, regardless of all the reasons. They had just had a bad quarter. But in a way, we kind of knew that. Their core business is under pressure. They have to right-size the capacity, the labor force, and everything. So I think that'll take some time. They're getting into the same-day delivery, next-day delivery, and all that is going to take investments. All that is going to weigh on the stock. But down the road, I think it's going to position very well. But near term, it's going to be under pressure, and expect some more downdraft for this company.
What do you make of the stock reaction, Santosh? In a company like Apple, I mean, you've pointed out the numbers weren't necessarily bad. Some of the headwinds they highlighted, we knew about. For those investors who've been following what's happening in China, following the chip shortages, what do you make of this reaction, and what does that tell you about just how jittery investors are around big tech?
Exactly. They are very jittery, but I think the headline numbers were pretty good, but no one looks underneath the thing. They're just throwing everything out. But if you look at the iPhone numbers, they were very good. You look at the services business, they were good. Maybe they grew slower than expected, but they were pretty good. In fact, revenue and EPS were record numbers compared to the past. So I think Apple, it's overreaction. I would say for long-term investors, it's a buying opportunity if you want to get in there, because this is a long-term story. It will do well, but near term, everything's getting hit across the board. Like someone said, there's a buyer's strike going on, especially in the tech sector. No one wants to dip in. They don't know where the dust is going to settle. And so there are a lot of ongoing issues. China lockdown is a big issue. We don't know if it's going to be contained. It's going to spread further. So that's a wild card. The war is a wild card. And the inflationary pressure here, the demand side of the equation, is also a big risk at this point. So let's see. So far it was the supply, but now even the demand side is under question. So a lot of issues. People need to just hold on, don't panic, and just kind of wait, because these are fundamentally great companies, bellwether stocks. They will do well. Amazon has its own stories, of course. I mean, the online sales are dropping, brick and mortar are increasing. There's some headwinds, secular headwinds that they need to work through. But I think Amazon has the capacity to get through. They have the resources, but they need to kind of digest everything and take some time to readjust and refocus.
Let's break down some of those numbers from Amazon. Obviously, their big driver, AWS, was still up 37% in the quarter. But when you look at the e-commerce side, I mean, that seems to be where the investor concern is. The total value of goods that were sold on Amazon grew at half the rate of 2020, which is, of course, the peak of the pandemic. How much of this is about just investors really resetting expectations around where the growth is for this company?
Absolutely. I think that's a big issue. They are resetting. That's their core business. That's where they got started, essentially. And so I think that's slowing down. And like I said, there's some secular wins there. There's competition in that space, like Instacart and others coming in, so the delivery businesses. But Amazon is investing in the logistics business, which is going to come through down the road. So right now they're kind of repositioning themselves. And I said a survey by, I think, from MasterCard said that the online sales were actually down for the first time since a number of years. And brick and mortar picked up this year. I think 3% down and 13% up. Some very high. Brick and mortar was high. So I think that's why there is a slight shift, and which was expected. People coming out, going out, and buying there. So I think that headwind Amazon will have to readjust to, but they have the resources, they have the foundation, they have the infrastructure to go out and execute and get that share down the road. But at this point, there is some pressure.
Santosh, really quickly, want to ask you about another stock you cover, Alibaba. Obviously, the Chinese tech name's up in a big way today. We got that report from the Wall Street Journal saying regulators are potentially looking to back off some of the pressure from these names in the face of slowing growth. What is that going to mean from Alibaba, and does that change your expectations for the company?
Yeah, I think Alibaba is it's a anchor stock. I mean, if you have to invest in China e-commerce, that's the name to invest in. So I think that's good news. I think we need that. It's a fundamentally good company, good business. And the only thing that was holding them back was the regulatory headwind. And if that's clear, I think they can execute and do well. I think that's no question about it. That's a blue chip stock as far as China is concerned.